Good morning, everybody. Welcome to the Flow Show. It is the 1st of December, the last month of the year, and probably, well, I'd say maybe 18 days to get your trading done, and then everyone will be finished for the holidays. So not long to go now. Have you got your Christmas decks up? Let me know. Right, let's get cracking. There's no K-Man today. He's got a day off, so just me, myself, and I. So that's who's going to take you through the show today. Going to start off with some data in China. We had some PMI data. It's all the PMI data coming out today. China manufacturing coming in unchanged, well, as expected, 49.2, slightly up from the 49 previously. Services 49.5, so going into contraction. Was expected to dip to 50 from a 50.1, so that came in pretty soft. Might as well stay with the data while we're doing that, because Australia, that number came in as expected, 51.6, again moving into expansion from the 49.7 previously. We'll go all the way through while we're on the data. We had Japan as well, going backwards slightly, 48.7 from what was expected, 48.8, but still a rise of 5 pips over last month's 48.2. Then we had the Caixin manufacturing number there, moving into contraction, 49.9, was expected to stay in expansion. Coming over to Europe, Spain, they came in lower, 51.5, was expected to go up until it went down. So a little bit of softness there. And you'll have to excuse me because I've got a delivery. Give me 1 second. Sorry about that, folks. Typical, it comes just as I'm starting the show. So sorry I had to get that parcel. But back now. Anyway, right, where was I? In Europe. So done Spain, Italy. Their manufacturing PMI improved 50.6, better than expected. That was first numbers for Spain and Italy. France final coming in at 47.8, unchanged over the flash, confirming the drop. 48.8. Germany as well, a little bit backwards, 48.2, confirming the dip from 49.6. Eurozone as a whole, 49.6, a bit below the flash number, it back into contraction too. Then we had numbers out of the UK, the PMI first, coming in unchanged, 50.2 over the flash number and October's number as well. Mortgage approvals came in at 65.02 thousand versus 64 expected. So it was a dip over last month, but not as much as expected. Bank of England consumer credit coming in lower, 1.119 billion for October. Versus a 1.4 billion previously. Credit card spending, which is something I'll keep an eye on just to see what's going on the plastic, that came down to 600 million from 700 million. So everything's fine and dandy with that. Right, going to shoot all the way back to Japan. We've had Finance Minister Katayama saying she's considering revising the corporate governance code. So they're going to be doing some tinkering with things like listings as well, because they're going to add support for firms before and after they list. Bank of Japan's Governor Ueda, he's definitely in the hawkish camp at the moment, because his comments are far less cautionary than they were before. He would give some positive comments and then add some cautionary comments in. But his last few appearances, he's been much more on the hawkish side. He says they're going to raise the rate if the economic outlook is realised. That's the same old line. But he says the likelihood is rising gradually for that outlook. He says negative GDP growth is expected to only be temporary. He says the feared impact of tariffs, US tariffs, on the global economy is not materialising much so far. He says a hike would be an adjustment of the degree of easing, so not even a hawkish hike if they went and hiked. But that means that he can still hike if it's not too, let's call it tightening than they would like. He said adjustment needs to not be too late, but not too early. He says it appears that the uncertainty surrounding the outlook for Japan's economy is gradually diminishing. That was something that had been increasing, or something that they'd been pretty worried about. He says FX is more likely to affect prices than before. He says we want to make a policy decision in December, looking at wage information as well as other data. He says delaying the rate hike too long could cause sharp inflation and force us to make rapid policy adjustments. He says the mix of the government's proactive fiscal policy and banks' adjustment of monetary support will help achieve sustainable economic growth path. He says he wants to elaborate more on the future rate hike path once we raise rates to 0.75%. So that's going back to that assessment. Is it lesser easing, or are they turning to full-on tightening? He says he wants to scrutinise whether there's been no big impact in the data. He says information that will come out from the data that were not available during the US government shutdown. So the deck hike is definitely on the cards. I still think it's has the potential to be a little bit of a window. If they don't go in December, they'll probably go in January. But with your reader there, a hike is definitely on the cards at the moment, barring any other news that we don't know about. And we still have to keep an eye on this China, Taiwan, Japan situation that is still bubbling over and could cause some impact. As far as the yen's concerned, we're seeing dollar yen on the slide again, just had a little low of 155.16 not too long ago, creeping towards the 155 level. The yen index continues to pick up slowly. That came in at 75.4 versus prior 75.37. So that's on the creep, but still looking fairly weak. So a lot more needs to be done. Right, we're done on the PMIs. Currently waffling on is Mr. Starmer in the UK, trying to save his Chancellor's neck. The weekend press has been full of it about, well, what the budget means for growth and things like that, and whether Reeves has misled the public and her own cabinet in the run-up to the budget. You'll remember that the OBR updated her all the way through October at various points as to what's going on with the fiscal situation, the black holes and all that sort of stuff, the headroom. So it came to pass that she didn't need to do that emergency press conference. The black holes and everything that she was warning about and scaremongering about didn't exactly exist. And now she's facing a bit of a pushback from people in her own party as much as everyone else. And as I say, that's one thing that politically that's happening at the moment in the UK. Could be very dangerous, because if she gets the boot, who comes in could be even worse in terms of the market's view. And that could see the pound really getting a hammering. But meanwhile, Starmer is out as we speak, or has been out, trying to smooth the waters, shall we speak. But this is something that's going to grind on. And so far, the budget's gone exactly how I was predicting it last week. We had the fiscal stuff. The market was happy with all that. Now we move on to the future and what next and what it all means for growth and the economy, the Bank of England and everything else. And that is the dour view the market's taking at the moment, or starting to take at the moment. Right, moving on from that, ECB's Lagarde says interest rates are at the right level and the situation is good. That's one meeting later on in December that's going to pass by probably without much fuss, unless there's a big change in their new updated forecasts. Going back to the data last week, we had GDP out of Canada. Q3 numbers coming in very impressive, up 2.6%. We're expected to come in up 0.5%. So that was good news there. The monthly number coming in at 0.2%. Even that was a little bit better than expected. So good news there for Canada. That's likely to keep them sitting on their hands for a little bit longer. They can probably see out the year without doing anything. Over in the US, Trump, speaking about the Fed chair, says he knows who he's going to pick, though he declined to confirm it was going to be Hassett. Trump is apparently, according to reports, going to recognise occupied Ukraine as part of Russia, something the EU has warned him not to do. Apparently, Witkoff is going to meet Putin sometime this week, as we knew last week. So that situation still rolling over as well. All right, that's it on the headlines. Obviously, an extended US holiday on Friday, so things were a little bit quiet. We'll see what happens now. Markets are full on back to work this week. We'll have a look at what's coming up this week. We've said it's PMI week this week, or has been. We're going to have the ISMs coming. They get the US manufacturing number coming later, as well as the S&P global number. So we'll get to see what's happening in the US side of manufacturing. Tomorrow we get Eurozone flash CPI data. Again, shouldn't be too much for the ECB to get worried about, but just in case, there's not usually a big variation in that number, but just in case, you never know. Wednesday, we get all the services PMIs dropping as well, final numbers and fresh numbers, depending on where you are. And then we get the ADP employment reports. Now, there won't be an ADP weekly tomorrow, because when they have a week when it's their monthly, they don't do the Tuesday one. Don't ask me why, and I still don't know what the other numbers mean for this one, given that they've pretty much all been negative. Theory should state that this employment report should be a negative number as well. Then we get the ISM later on, services number there. That'll be a big one. It's not obviously a jobs week this week, as it would be normally. So any employment clues ahead of the December FOMC will have to be taken from these PMIs and these ISMs, because the rest of that data, NFP and stuff, won't be coming till well after the next FOMC. Thursday, we get a bit of retail sales data from the Eurozone. Challenger layoffs report. That one's been a bit funky of late, dropping early and all sorts. So keep an eye out for that one, see if that remains lofty as it has been. Jobless claims, that should be all up and running, fully back to normal as it was last week. So we'll see if there's any wobbles there. It was a pretty good number last week as well. A bit of household spending out of Japan. Thursday evening. On Friday, we get some GDP, retail sales. We'll get Canadian jobs data coming in, so we'll keep an eye on that one. It does say that we're getting PCE, but I'll double check that to see later in the week to see whether that's coming or not. Apart from that, and US consumer credit, that's it for the week ahead as far as the data is concerned. So a reasonably good week. Now, obviously, we do start getting into central bank territory over the next couple of weeks. So this data is going to be pretty important, depending on which country it's coming from. Right, that's that. Got all that out of the way. Let's get over to some pricing. So looking at euro sterling to start off with, I was hoping we'd get a little bit of a push lower in this one. I did have some bids in 87.50s last week, but I pulled it because I thought we might be having a shove lower. Never happened. So we've opened the week much stronger, up testing the 88 level once again. So we're over the fiscal hump. There is a bit of euro in this, more so than the pound getting weaker. Cable's not doing an awful lot, but the euro's looking fairly strong today for some reason. Don't ask me why. So anyway, this one, I'm expecting this one to get back on the upward move bandwagon, whatever you want to call it. And depending on what happens with Reeves Starmer this week and the market's take on the budget, I would not be surprised if we are pushing well into 88s by the end of the week, maybe even having another look up towards these highs. Because there's going to be a bit of pressure now. Things will turn to the BOE. Are they going to have to take a little bit more of a dovish tilt, go for a cut and maybe indicate more to come based on that budget and the lack of growth prospects from that budget. So the euro, that's been on the march, pretty much for a couple of weeks now. All pretty slow going. I mean, we're up 130 pips in the space of a couple of weeks. So it's not too shabby, but not exactly rockets. Volatility is still dropping in this one. Currently 1 month at the money vols at 5.35%. If we're getting below 5%, that means things are really going to be quieting down. They're quite enough as it is. So we've got a bit of a old level here around 116.30s. Not a clean level, but we've knocked around it before. So just have a look at this. We're finding a little bit of trouble into there. Otherwise, the old fib and probably towards these highs in the 116.50s if we keep going. And then a bit of a bigger level, 116.60, 65 up against this prior highs. Here was a sticky point back in October. So it's on the grind. Support likely going to be seeing that into the figure and just below, just around there in the 115.90s, 85.90s. So keep an eye on that as initial support if this is going to keep going. But yeah, I don't really know what to do with the euro here. I've not been trading it for long. I don't ask why. I was short before when we were knocking around the 115.30s. I don't know why I wasn't longing it off there. That was my plan originally, but there you go. Things change, but that 115 level once again proved pretty solid, as I expected it when we came down. So that's your real base there. That's still pretty much a gateway for anything lower. You're not going to get anything unless you're breaking and holding below that 115. We've done it before, but we haven't stayed down there for long. So that still remains the key level. And we could push on anywhere really back up to maybe the 117s. But as I say, a bit slow going. We need to just break this series of highs here, which we might be doing at the moment. If you were to draw a line, I'll just chuck it in there for good measure. Just in there. So we are sort of breaking it at the moment, but let's see. We need to take out this prior high. Otherwise, we've still got this series of lower highs featuring in there. But all in the mix at the moment for that one. Dollar yen, as mentioned. So this one continuing its turn off those highs after we got the Takeichi numbers, the fiscal numbers, and obviously those other BOJ members talking a bit hawkishly. So this one doing nicely, keep coming down. This 155 is my key level, much the same as the 157 was up here. So if we have a bounce here, if it holds anywhere from here around 20s at the moment, then we could see a run back up. Let's take it back to an hour. A bit clearer. Oh, there we go. Yeah, so if you bounce anywhere from here, and we have been doing that, we've been sort of selling off in Asia and then picking up a bit in the US session. So I wouldn't rule out a move back up towards this 155.70s, which has already shown up as resistance after this break. And if we can get up there, maybe we can go and look at another test of 116. But as long as we're not getting through that, that will keep this bearish pressure in play. And that'll mean a move to 155. Now, if we do break this level pretty easily, it could accelerate this move that we've seen, and we could be down 154 mids or even lower pretty quickly. So I wouldn't rule that out, seeing a spill through this level, accelerating that move lower down. So lots to look at for that one. But as I say, keep an eye, because we do seem to get this switch between what happens in Asia and what happens in the US session. Dollar CAD got a bit of a whack last week, late last week. Could have been month end, corporate month end or whatever. We had a real big whack down. But again, it just didn't last, and we crept back up. We've got back above my big old level. I've added a little bit to my long, my core long, just on this move back above this level. See if it's going to creep back up. A bit like the euro dollar, as I say. We've had these breaks of this line, but it hasn't lasted too long, and we've got back above it pretty quickly. Only if we're holding below there and we find it resistance for any length of time are we likely to see maybe a more sustained move lower. But otherwise, it's had a knock, couldn't get down to that low. So again, we've just got this stepping up of lows, which keeps the trend since the 135s, this trend in play nicely. I've got no reasons not to be staying long in this pair for the continuation. Now you guys and girls like looking at Aussie as well. This one, it's had another decent bounce, but it struggles. And I know we were talking about this last week. It just struggles up around these mid 65s. We can't take on these prior highs, and we are got a couple of series of lower lows kicking in. So it looked like here, similar. We bounced, made a move up, held that bounce here in the 50s, 60s, but then we crunched both those lows, which isn't good news. But again, and there's a lot of these levels about. It's a level, this 64.40. We go below, we can't stay below for any length of time. So it really is just building up into a bigger level. So if ever you see signs that we're holding below there, that's maybe a signal if you want to be short on this one. Now I'm going to have a quick look at silver. Not something I trade often, if at all. I know you guys are looking at it. A lot of messing around over this one on Friday. Now I've seen reports that there was a big deliverable position that might have caused some of this damage. I don't know whether you guys discussed it last week. The usual stuff, shorts getting caught out. I know that always happens in silver, but apparently there was a big delivery which caught the market on the hop because everyone who was short and had to deliver it in, then had to scramble around a bit. So whether that's got any truth through it, I don't know, but that's the rumour doing the rounds anyway. It's pretty clear what you want to be looking at. This big double top that we had up here, we've broken it. That's your first area level of support, major support if we do see a retrace here. Where's the top? Anywhere you like. Wait for the price action to develop. Look for a bit of support into this 56, 48, 50 area, just because of the prior price or the price action we've had today. As you can see, we had a little bit of a stall on the way up there, and we found it as support on the way down. Let me just chuck a little line in there. Might as well do it as go along. So yeah, just around that 45, 50 area. Just keep an eye on that. We have got a top just coming in shy of that 58 level. So that's a marker again. If we hold this move up here, then just keep an eye on that. If you're looking to top pick, that's the sort of price action you want, but it's very short term. So treat that with respect. If you're breaking 58s, we're probably off and running. There's your initial levels to keep an eye on intraday, at least up there and down here. Take your cues from whichever way we're moving from that. But as I say, the bigger level is down against these prior double top down at this level. So if you keep an eye on that. Gold, that's off and running. We've taken out that prior high, not really putting these in danger yet, but we are creeping back up again. Got this bit of a level here just on that price action through October for a few days. So keep an eye on that. If we bounce up to that level, could just find that it just taps it and just makes it a bit of a struggle to get through. If we get through there, though, we're probably on for a move back up towards those highs. Mike, can have a look at the Kiwi, of course. Dimmy, capital requirements at the banks. Yeah, that's been touted for a while. It's not going to be new news. If they do it, we may see a bit of a confirmation rally in the quid or a little pop. I don't expect rockets on the back of that. But yeah, it has been touted for quite a while now. But it's all part of the bigger, I think, fiscal report that the BOE fiscal stability, financial stability report, bank finance report they're bringing out tomorrow. So yeah, could have a little reaction, but certainly I wouldn't be trading ahead of it and jumping into the quid on the back of that. Cable, it's not really doing an awful lot. It's going sideways. If you compare it to, I was talking about the euro, that's pushing on. Cable just holding back. There may be a bit of this Rachel Reeves stuff coming into it, but it's not dumping off. So this euro sterling move looks a bit of a speed move, euro over cable at the moment, but it's hanging in there. Let's say that. But pound against the dollar is a different kettle of fish when you're talking about what's happening here in the UK. Still not a pair I want to really trade for UK fortunes. So yeah, we can't get below 132. We've had a test this morning, it's held it. What do we get to? 132.05. So that's really your level at the moment, 132s, and then we got this 132.50. Again, little nicks above, but we can't break it and hold a break. So you know your range, 132, 132.50 in that one. Kiwi. Fred, what do you mean we've got a new RBNZ governor? Hawksby's the governor. You're talking about that other fella who's become new chairman of the board, which is not the governor. They've got a board and they've got the MPC, if you like. So unless I've missed something, Hawksby's the governor in place until a few years, isn't it? I think. Hawksby's resigning, is he? Oh, I must have missed that news. When did that happen? I'll have to look at that then. That's a bit of a shocker. All right, thank you, Mike. I'll have a look at that. Must have missed that one. Right, so we're going to have a look at Kiwi, which hasn't done anything. So if that news has been out, it's not affected the Kiwi dollar at least. Okay, Fed, I'll have a look at that. So anyway, not known in that. I thought he got in the job, Hawksby. I'll have to double check it anyway. I'll have to have a look at that. Anyway, Kiwi's not doing an awful lot, so it's maintaining this bounce up. Anyway, now we know that they're on hold. Where have we got here? So we busted though all through the fibs, and now we're seeing a bounce in this level here, 56, 85, 86. That's really your key level if we get a move back down to there. But as for the upside, well, it's on the creep. Has it got enough to take back some of this big move? Let me get rid of that one and put in a fresh one in there. Let's do that quickly. Let's do it on this one. Let's do that just roughly. So this is the move since June. So can we get back this 38.2 area around the 57, 70s, 57, 80s? Going to be a key area. We did have some prior tops in there that need to keep an eye on, right bang on the 58 level. So that's going to be your marker. So big old zone here from that 70s, 80s up to the figure on this bounce. That's going to be really key as to whether we can turn this around or whether this is just a temporary bounce and we come back down again. I'm still short a bit of Aussie Kiwi. That's still holding to the downside. It's not manufacturing much of a bounce. But key level down here is this 114, 113.90s. If we break in below there, then maybe we got something more cooking, but it's not looking like it wants to push up. So at least from the Kiwi side, we know the influence is a bit washed out, but yeah, it needs to do more to keep going lower. So down below 113.90s. Another one I'm keeping a close eye on is dollar MEX, which last week we had a little move up above 1850. That's washed out. Now we might be having another look lower down towards the bottom here. I don't see any reason why this one should break unless we get some big news coming. Or there's a big move in the dollar. We've still got all this USMCA stuff ticking over as well. Sheinbaum, apparently he's going to raise the minimum wage over in Mexico as well, so that's going to put some pressure in there. But this one, I'm looking at this. I still might have a nibble down here, 25s maybe down to the prior lows, 20s, 19s, just to see if we manage to hold the range. But if we are breaking it and we're breaking it properly, then this one's got some legs probably to be down 18s pretty quickly, if not more. So yeah, if this one properly breaks, we could see some real sustained downside for this one. Right, anything else for anything else, boys and girls? Michael, Euro Swiss. That one's running into a little bit of trouble again. Let's come in here. So we're probably back in this zone. It got above this 93.30s that it struggled at the last two times. Ran into the next area, 93.50s. Just a little bit of a noise area, but that was enough to put a top in for now. We're now looking like we're struggling to stay above this 93.30s. So I'm not expecting this one to fall out of bed, but if we do find we're topping around here, then we could see a bit of a pullback, maybe down to the bottom of the zone. I've just got this trend line in just to measure these two highs, potential area that we might pull back to if we get there. But otherwise, I'll be looking at the bottom of this zone again, around the 93, 92, 80s, 90s, if we get a pullback there. Conversely, if we do manage to get back above and hold above this 93.30s, we should go on to take a crack at those highs. And if we do then break that, it's going to be probably a slow grind up, and maybe we get a move all the way up to the top of the zone, and we can see what happens with that. But it looks like it's gone a bit more neutral again, which this pair does do. It has a move and then it just peters out and just waffles sideways for a bit. So look for a bit of that coming up. Right, if there's not anything else, we shall call that session nice and early for a Monday. Kay will be back tomorrow, so we'll get stuck into that again. Have a great day. Have a great week. Be good, and we'll see you again tomorrow.